And we believe with a slightly stronger economy, that's quite important because there is ultimately a trade-off between getting fiscal consolidation and having to have higher interest rates than you might otherwise expect.
But you seem to be calling for more restraint than was indicated in the last year's.
We're repeating our calls from last time. On the tax side, well, we do monetary policy, not tax. We know that tax is a very complex area and there are a lot of different government objectives drive it, and that's as it should be. But we have always made the point quite clearly that we are looking for a more neutral tax environment when it comes to householders with funds deciding whether they will consume or save, and if they're going to save, how that might be invested, whether it's housing or elsewhere.
Dr. Bollard, in the monetary policy statement, there's a forecast increase in the non-tradable inflation rate to nearly 3%. Why do you think this is happening, and how sustainable is that?
The key factors were an improved global outlook, which also feeding through to improved exports, particularly in prices, particularly dairy prices. That gives more confidence in the economy. As the economy recovers, that transmits through to how firms and businesses can pass on prices. So there's a revision of about 1 percentage point to non-tradable inflation. You see it's reasonably sticky around that for the next 3 years.
Can the economy sustain a non-tradable inflation rate at 3% for the long run?
Well, it has for quite a long time back in the past. It's not necessarily how we would like to see the economy. We'd like to see non-tradable inflation pushed right down into the sort of zones where tradable inflation has settled. But it has been a story in New Zealand for quite a long time now.
And also the overall target is headline CPI, and when you measure both the non-tradable and tradables, we have a picture of the next 2 or 3 years with headline inflation running around 2%, and the non-tradable part of that is probably at average or slightly below average over what we've seen in the last 5 years.
Well, could I clarify in your comments on fiscal consolidation, do you expect the rate of government spending to slow down or actually to see significant cutbacks next year?
Our forecast is predicated on the budget numbers, this year's budget numbers actually feeding through for next year, adjusted by the slightly stronger economy that we are forecasting and the slightly different nominal picture, which is important for the tax take. Is that a fair summary?
Are you happy with the level of the New Zealand dollar, and do you think it more accurately reflects the fundamentals of the economy now, say, compared to at the time of the last rate review at the end of October?
It's looking a little bit less out of line than it has looked over the last few months, and that's because we've seen we've seen dairy prices, other commodity prices pushing up, impact on terms of trade, and we've also, of course, seen the trade-weighted index starting to come off a bit. We are watching with interest as to whether or not we could be starting to see a change in mood in the international financial or the international FX markets, where there's been this dominating view towards more risk and more portfolio rebalancing out of US dollar. There's a few, at this stage, early signs that might be changing. We'll watch that quite carefully.
Could I check on, in terms of your outlook on the ETS position, are you incorporating, anticipating some rise in prices as a result of that, and when does that come through?
Yes, that's a good point, thank you. Our forecasts do not incorporate the price or any other effects of emissions trading scheme. We'll be doing that in our next forecast. We have a broad understanding of likely ballpark effects. We think they're likely to be significantly less than with the previous policy design for emissions trading scheme, but nevertheless countable. They're not in this forecast.
Dr. Bollard, you're forecasting annual house price inflation of 12% by the March quarter. Well, what makes you think that this won't flow through into more debt-fueled consumption spending? Why is it different this time, do you think?
We think it's different for a number of reasons. One is that we think New Zealanders have taken some lessons out of the global financial crisis and what they saw as some vulnerability in house prices. Secondly, from that, they have also taken a view that they were getting themselves quite indebted, and in many cases we're seeing an attempt to rebalance household portfolios with less debt. And thirdly, if we just look at the credit numbers, they are very, very restrained at the moment. So we'll keep watching those quite closely, but at the minute we're simply not seeing the signs of a debt-fueled asset bubble here.
Just one more on the Reserve Bank of Australia, likely to, according to markets, to increase its official cash rate to over 4.5% by the middle of next year. Would you be comfortable with such a big gap opening up between Australia and New Zealand over the next year if you keep the official cash rate on hold at 2.5%?
Well, I mean, as ever, we will not comment on what another central bank is doing, but you can be sure that we watch quite closely what is likely to be the profile of other central banks' interest rates going out through next year, and we're taking that into consideration. So simple answer is yes.
I wonder what you made of the Labour Party's decision to walk away from the long-standing consensus on the monetary policy framework.
Well, we've got no comment on that, other to say that we're confident that inflation targeting monetary policy, as we're carrying out and in view of some of the changes we're putting into place following the crisis, can work.
Governor, are you happy with the bank's mortgage lending rates?
The bank's mortgage lending rates are currently reflecting increased cost of funds, and cost of funds that's remaining quite stubbornly high, whether that's retail or from international markets. So we have less concern about that than we did when we expressed early this year some concern that they hadn't passed on some of the interest rates. So we've got no particular concerns about those at the minute. They are reflecting real costs of raising funds internationally.
Hello. Yes. Is this? Can I get you just to clarify the wording around the timetable, as you see it, for raising the cash rate? Are we to take it that the change in wording from keeping at the current level until the second half of 2010 to around the middle of 2010, is that saying you expect to start raising the rate earlier than you did at the end of October?
Well, luckily in this room there's a whole lot of media experts who are expert at interpreting words. Some of you even have English degrees, I know, so I'm confident that you're going to be able to interpret that one yourself. Are there any other questions?
So are we to expect a happy and prosperous new year?
Thank you, Barry, for that point. Finally, on a more personal note, since this is the last press conference of the year, I would like to thank you very much for your help and cooperation through the year. It has been one amazing year, as you all know. At the beginning of this year, we were seriously worried about the financial system and the state of the economy, both in New Zealand and internationally. It's with some relief that we see much more secure conditions as we go into Christmas time. I am aware that at the beginning of the year, when New Zealand was in such a vulnerable state, actually it would only have taken a one of the major media people looking for a fast headline, acting on rumour or passing on something irresponsibly to have sparked off some real problems in our system. That we were concerned about that. That didn't happen. You all, I felt, acted very responsibly through that, and for that we would like to thank you. Finally, it's not a forecast, it's a wish. Have a Merry Christmas, Barry and everybody else. Thank you very much.